Welcome to the April Spotlight on Insurance and Property Casualty Coverage, brought to you by ProducersWeb.com. I'm Paul Wilson, and in this broadcast we'll cover some of this topic's biggest trends and most insightful research. This Spotlight on Insurance and P&C is sponsored by InsuranceLeads.com. Expect the highest quality insurance leads and high closing ratios. To find out more information, please visit InsuranceLeads.com. Insurers' top concerns include training and attracting a new generation of underwriters, according to a recent survey conducted by insurance software provider First Best Systems. According to First Best, the insurance industry is facing a growing shortage of qualified and experienced underwriters as older underwriters continue to retire. The findings found that few insurers have leveraged technologies that appeal to Gen Y, facilitate real-time training and collaborations for new hires and teams, and capture underwriting expertise for knowledge-sharing purposes. When asked about their greatest concern for hiring and training new underwriters in the near term, 35% of respondents cited ongoing training, underwriting skills, and knowledge sharing. Meanwhile, 30% listed finding and attracting qualified applicants as a concern, while 15% cited generational expectations, and another 15% said employee retention was one of their main challenges. When it comes to methods for training and sharing best practices among team members, 38% cited meetings, primarily weekly, while another 38% answered ad hoc collaboration and information sharing. Meanwhile, 15% said ongoing training and personal mentoring was their method of choice, while 15% said they still use paper-based internal manuals. Finally, just 20% reported using technology such as instant messaging, intranets, blogs, or email to collaborate with and educate underwriters within their company. Insurers operating in the global marketplace must prioritize data integration, specifically focusing on the need to improve customer service and to create operational efficiencies that will provide returns in the future, according to a recent industry survey. Commissioned by Sterling Commerce, the study finds that around half of all insurers face data integration issues relating to multi-enterprise, external, connectivity, and internal EAI integration. In Europe, insurers view issues with external and internal integration nearly equally, with 46% citing connectivity and 48% mentioning internal integration. Meanwhile, 56% of North American insurers consider external integration challenges significantly greater, while only 33% cited internal regulation. The report also found that a large number of global insurers have created a policy and strategic framework for data movement, but both European and North American insurers indicate that the policies have not yet been applied consistently through the use of software. However, European insurers are ahead significantly in addressing the issues, with 52% of respondents indicating they have applied the policy consistently, compared with just 23% of North American insurers. Finally, the study found that in order to prepare for recovery of falling premium revenues on the distribution side of carrier operations and falling investment income on the fund management side, insurers must focus on customer service, profitability, and business growth through market diversification. The first quarter of 2010 is expected to be the worst on record for natural catastrophe losses, but will not be enough to turn the market on its own, according to a recent global reinsurance renewal report by Willis Re. The report details an unprecedented $16 billion in insured catastrophe losses during the period, including the earthquake in Chile and windstorm Xynthia in Europe. The catastrophes led to large losses in smaller markets for reinsurers, meaning they will be less able to generate significant premium volumes. In addition, the first quarter losses leave reinsurers exposed to possible losses in the third and fourth quarter, which are historically more loss-prone, the report said. But despite the losses, reinsurance rates on loss-free programs are not anticipated to increase anytime soon, Willis said. According to CEO Peter Hearn, quote, "While one poor quarter, which is an earnings issue for reinsurers, will not be sufficient to trigger a general market turn on its own, it is likely to stiffen reinsurers' resolve on renewals later in the year, as the size of the recent catastrophe losses develop and back-year reserve releases reduce," unquote. He added, quote, "This is balanced by the remaining reinsurance capacity oversupply and the continuing difficulties companies face in achieving any top-line growth to offset claims and expenses increase. Against this backdrop, absent any other major losses, buyers that will be renewing loss-free programs later in the year can continue to budget for stability or modest reductions in their reinsurance costs," unquote. I'm Paul Wilson, and thanks for watching the Spotlight on Insurance and P&C. To see more video spotlights on your favorite products and practices, find them on ProducersWeb.com and browse by topic.